Storing your money in a traditional bank doesn't lead to wealth accumulation. Instead, it maintains your financial status quo or even leaves you worse off. You can circumvent the bank, allowing you to gain interest rather than forfeit it. Reap tax benefits without tying up your funds until the age of 59.5, and stop enriching the bank at your expense. The goal is to earn interest, not pay it. There's no need to rely on banks for loans. By establishing your own familial banking system, you can utilize the same tax advantages enjoyed by the wealthiest families. You'll also maintain control of your funds without depending on the fluctuating stock market to dictate your financial outcomes. Sure, this might sound a bit wild. Can you really build your own privatized bank and lay the foundation for your family's financial future? Well, there are methods to increase your liquidity and reclaim more cash. These strategies are not only legal, they're also an ethical obligation. If you want to retain more of your money, consider setting up your privatized bank. Privatized banking is a profitable alternative, yielding interest instead of costing it. This approach can help you save on expenses like insurance. For instance, people often pay for term life insurance policies that only pay out about 1% of the time. If they don't pass away, their money simply vanishes. There are other ways to save on taxes without tying your money down for decades, just like retirement plans. There are other benefits to sidestepping the bank and replicating what they do with their reserves. By saving money in an overfunded, permanent cash value life insurance policy and aligning those savings with your money-making decisions, you can easily outperform the meager interest rates offered by banks. You can use your own funds instead of relying on the banks. Establishing loan scenarios that allow you to control repayment periods and utilize your cash. Here are 3 steps to create a privatized banking system for yourself. First, start by paying yourself first. Establish a wealth capture account. This could be a checking, savings, or money market account that is safe, liquid, and accessible. Start by becoming more efficient and setting aside some savings. Once you've accumulated savings, you can make deliberate investments. People often confuse saving and investing. For example, money saved in a 401k is an investment, typically tied to volatile stocks and mutual funds. Conversely, savings are liquid and won't decrease in value. While it might not outpace inflation, you won't leave it untouched indefinitely. Maintain enough for peace of mind and financial stability in case of an emergency. The goal is to recover 20% or more of your income that's being lost due to excessive taxes, high interest, unnecessary investment fees, or redundant insurance costs. The aim is to build a peace of mind fund, cultivate a habit of automatic saving, and eventually transfer that money to your own banking system. The second step is identifying where to find the money for your privatized bank. You may have investments like 401k, IRA, or insurance policies that can be tapped into. What if we restructure your loans? Maybe you have a short-term loan that could be paid off, or perhaps the loan term can be extended and the interest rate reduced through negotiation or by switching to a loan type with a lower interest rate, like a car loan or mortgage. The idea is to discover that cash to start funding your bank. Once you do, you'll begin earning interest on your money rather than just paying it towards loans. Never forget, there's always an interest cost. You either forfeit the right to earn interest when you pay cash, or you pay interest to a bank when you borrow. Don't borrow to consume, don't take on debt without acquiring an asset. Instead, consider this: take the cash lost to taxes, insurance, and non-performing investments, and invest it in your privatized banking system. Instead of a conventional savings account, you can start accruing tax benefits. You can earn higher dividends in cash value or simply have a place to send extra money for additional benefits. Privatized banking via permanent insurance offers accelerated benefit riders. This means you can spend part of the death benefit while you're still alive if you qualify for long-term care. Your interest can compound within this system. When you access your money through loan provisions, they use your money as collateral, allowing it to earn interest while they lend you their money. This doesn't interrupt the compound interest curve, which can have significant long-term impacts. If you're curious about setting this up properly and whether it's possible for you, please reach out. Finally, the third step involves activating your wealth capture. usually a savings account with low returns that you've been helping to fund through tax savings. Once you've found that money, transfer it from a low-return, taxable account to a privatized banking system, specifically, an overfunded cash value life insurance contract that potentially quadruples your returns. With the correct policy design and money under your control, you can seize the right investment opportunities as they arise, investing in yourself. By employing privatized banking and setting everything up properly, you could potentially pay for your children's college education or settle loans and debt. Always consider the risks and only invest in things you understand. Investing in highly volatile, speculative ventures might not work out. Privatized banking offers far more stability. So, let's summarize the additional benefits. First, privatized banking provides tax advantages called first in, first out. The first dollars you deposit are the first ones you can withdraw tax-free. It's tax-deferred, and when you withdraw funds, you can avoid tax by borrowing that money. If there's an outstanding loan when you pass away, it's deducted from the death benefit and remains tax-free. These are just a few of the tax benefits. The accelerated benefit allows you to tap into it for long-term care, potentially eliminating other costs and boosting your returns. The cash value is protected from lawsuits and bankruptcy in over 40 states, and partially protected in all states. You don't need to pay for term insurance because you now have a permanent death benefit policy that outlives you, guaranteeing a tax-free cash inflow. This is about buying your net worth rather than trying to build it. Remember, you can either enrich the bank or yourself. That's what privatized banking is all about. Saving money in a bank doesn't make you wealthy. Banks invest a portion of their reserves in cash value insurance. Don't stay stagnant, don't enrich them, eliminate the banks and the middleman. You should be the one earning the interest. You should be the one reaping the tax benefits without tying up your money. It's time for you to earn interest, not pay it. Don't depend on banks for loans, establish your own family bank. Take advantage of the same tax benefits that the richest families use, and maintain access to your money, while never allowing stock market losses to dictate your financial outcomes. Now you have the core knowledge to turn your ideas into profits and build the life you want. I invite you on your journey towards a tax-free future and financial prosperity. This video is intended for educational purposes only and should not be used as a substitute for professional advice.